Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Andrew Lofredo. He has nearly 3 decades of commercial real estate experience as a broker, property manager, attorney, and asset manager. Andrew is currently the CEO of CRE Vertical Advisors, which provides real estate asset management, property management, and advisory services to direct investments in third-party party investors. And they concentrate mainly on retail, industrial, and office properties in the New York tri-state region, which is, for people outside that region, that's Connecticut, New York, and New Jersey. I'm originally from Connecticut, so I know that region pretty well. And Andrew, thank you so much for coming on the show today.
Great. Thank you for having me.
So please tell us a little bit about yourself, both personally and professionally, because everybody has a different story, but you've been in here for 3+ decades or so, everything starting from, I believe, like as a real estate agent, an attorney, all the way to what you're doing now. So if you can just let us know kind of how you made your way to your current role here at CRE Vertical Advisors.
Sure. So, it's been, like you mentioned, a good 3 decades. I don't always like saying that, but it's been a good 3 decades. My career is always centered on real estate, even and I don't come from a real estate family or anything along those lines, but even as a teenager, I saw real estate as a very merit-based industry. And that's really why I made the decision to go in there. And I excluded from the 3 decades, but I actually was briefly a residential broker while I was in college. But that really wasn't for me. As you mentioned, I've had a number of roles within the industry, right? So it really started off doing tenant rep brokerage in office space in Westchester and actually Southern Connecticut. So in the Fairfield and in the Greenwich area, it really just kind of snowballed from there. I then became a property manager. I worked for a small firm, which was actually a great introduction into the real estate world. Started off as doing the tenant rep work, but then they ended up acquiring a building. And since there was only a handful of us at the company, I ended up taking on property management and really, realized how important operations were. And that kind of fit into my type of personality, what I like to do. And really to kind of snowball ahead a little bit, I ended up just taking over property management. While I was doing that, I went to law school in the evenings. Again, really never with the intention of going the partnership track and just becoming a lawyer, full-time practicing lawyer at a firm. I really wanted to be a better real estate person. I came from a blue-collar background, didn't really have much of that, white-collar knowledge, and I was trying to decide between an MBA and the law degree, and I liked what the lawyers were doing. After law school, I actually practiced law as in-house counsel for CBRE for a number of years. But then, as I mentioned, I transitioned back into the asset services role and, took over about 9 million square feet of office properties in the city that were under my portfolio. And really kind of built from there. So that was an exciting time in the sense of really just handling soup to nuts. We worked with investment sales, we worked with brokers. And then, moving on from there, and I won't go through every detail because, like I said, it's been 30 years, but what really led me to CRE, to create CRE Vertical Advisors was, while I was at CBRE, I'd worked with some, what I would call, family owners and more entrepreneurial owners. And I ultimately ended up leaving CBRE in 2009, so right after the 2008 issues that we all dealt with. And then subsequently ended up joining a large family-owned investment company. And what they wanted from me was to bring together the institutional quality management and operations, but to be able to function in an entrepreneurial and fluid environment, which is not an easy undertaking by any means. So, I ultimately ended up taking on their property management division, growing that into more of a SVP of operations role, where I kind of rebuilt the department, putting in policies and procedures, but again, remaining flexible in the entrepreneurial environment. And I had some subsequent roles like that, as a head of asset management for another family-owned company. And as I'm doing this, I realize the importance of the value add of kind of bringing those procedures for staying flexible, right? And then working with the nuanced needs of family-owned companies. And speed ahead a little bit, I originally formed CRE Vertical Advisors in 2019 with the plan of providing asset management and advisory services to family office and private investors. But then COVID came, right? So I ended up joining a family office directly as their CEO and general counsel. Got them through COVID. They were a large retail owner. And then subsequently, discussed my firm with them and my ambitions and how I feel I could provide better services to them. And they ultimately ended up becoming the first client of CRE Vertical Advisors. And we've been growing since.
Yeah, that's fantastic. So it sounds like the majority of your primary clientele, you're providing a much more, almost like a holistic approach, I guess you would say, to advisory services. Because I think when people hear property management, it's pretty much just like boots on the ground, collecting rent, stuff like this. And when I'm in preparation for this episode, I really kind of drilled down to see what you guys were really doing. And I found out that a large part of what you're doing, your portfolio, was really on the advisory services, consulting, and really even out to fractional COO services. So are these pretty much these asset management and advisory services, are they usually utilized by family offices? Is that really the main kind of your main clientele for these services that you provide?
I mean, yes, I definitely designed the firm for that type of clientele, for family offices, or maybe, that's always a little bit of a vague definition, right, of what exactly constitutes a family office. Some are very clear, some it's questionable, but really for that type of client, the family office, the high net worth family, and some, high net worth private investors. And the reason I kind of designed this firm with that in mind is, again, understanding the flexibility that they need. And I don't mean this in a bad way, but the hand-holding that they may need, which is different than, I've had just large institutional clients, and they were great in the past, but they may not need kind of the hand-holding and the really granular work. So, as you mentioned, yes, property management is an important part of what we do. We do have those boots on the ground, and it's very needed to add value. But I think what differentiates us is the advisory and the asset management work, where we essentially step into their shoes. That's how I like to operate. Like, we have a seat at the table. We're there to help them develop their strategy because the objectives aren't always clear. That's one of my first questions to clients, and not only new clients, definitely the new clients, but even my existing clients, to see if their objectives change over time, right? So we look at those objectives, and as advisors and consultants, we then work with them to define that objective and then build a strategy and then execute, but across the board. At every level of ownership.
It's great. How does working with a private investor or family office that, say, created their wealth differ from one that's inherited it? Maybe it's the second generation that had a connection with that founder, or maybe it's third generation that really have never worked with the person that generated the wealth.
Right. There's definitely differences, right? And there is, I don't know the exact stat, but there is kind of that understanding that after 3 or 4 generations, a lot of times the wealth is gone by that point. Part of what I'm here is to help them keep that wealth, right? When you're working with the founders, there's obviously the historical knowledge of what it took to create that wealth, right? So it's a little bit more. We work with those types of clients more almost as partners. Like, we're here to help them execute. The strategy component might be more set in stone. Because they built that strategy, they have kind of the knowledge and the interest. And frankly, in certain respects, they knew what it was like before they had the wealth. Whereas when you have subsequent generations, and this isn't necessarily a negative thing, it's just a different mindset, they've always had that wealth. So, it's a different type of understanding, and what I also find is, let's say, for speaking families, let's say it was, two siblings that started a business or something along those lines. In the beginning, it was two siblings. Now you get down to the third generation, it could be 15 people, so now the wealth is spread out. It's a little bit unclear as to who should be in control. So as you get further along from the founders, the actual dynamics and the management of the family group starts to take on a different life of its own. And in some respects, that's where as like an advisor comes in, can actually add value, because the family can set up a board, but you can have an advisor that comes in and executes.
Interesting. Do you prefer handling both property management and asset management on the properties you work on, or is it easier to just take one role? Or, I guess it depends on how easy it is to work with the owners, or kind of how many people you have to answer to.
Yeah. I think it's, the preference is certainly for us to do both. Again, because of the way we're designed, we are very holistic, as you had initially mentioned, where we do, in terms of executing the strategy, being able to have that high level view, but then also the boots on the ground execution really puts us in the most control, right? In terms of controlling the controllables, that's something where, we can handle it throughout our team, right? And the communication, just naturally, the communication's better when we're handling everything. We do have clients that we only provide asset management on. And we also have clients that we only provide property management on. So we are flexible and we will work with that. But the ideal scenario is that that we're handling both. But we have systems and procedures in place. There are some, good quality property managers that we oversee. We work with some syndicators, as part of our kind of expansion. We provide asset management to some syndicators as well. And in some of those scenarios, we may or may not handle the property management. We just help supervise the managers.
Yeah, that's a great. I saw that as one of your services you provide. That's a very unique service that I don't really see too many firms really offer. It's definitely a niche, because you'll have a lot of syndicators that want to handle their operations and do the asset management, but also if they're in an area that they shouldn't really be buying property there, but if they're, or maybe they take over a deal that was in a portfolio and one of them's, farther out here, and that's where they might bring you in there. You know what I mean? They don't really know exactly the best of how to handle that.
And part of the reason that where we came up with that service was, I kind of obsessed over setting up our infrastructure here, and just thinking about our procedures and our systems. And, I've come across, just in the industry, right? It's come across a couple of syndicators who have access to capital and they're acquisitions people, right? So they like doing the deals. But like I like to say sometimes is, some of the value we add is in maybe the less sexier side of the business in terms of the operations. So that's how that kind of came about, is we spent the time to build the infrastructure. We have the team in place. We have the accounting, we have the property management software and all of that good stuff. So it puts us in a good position to actually partner with a syndicator where they can focus on their core strengths, but then rely on us to execute. So we have a number of clients that we, try to provide those services for.
Yeah, that makes perfect sense, because within syndicator circles, usually they're talking about deals and cash. There's not as much talking about execution, which is extremely important, and the majority of the business.
Yeah, right. You have to do something with the building after you buy it, right? And so that's kind of where we come in and kind of help execute that.
We've worked a few times with family offices, and I'm kind of blown away a little bit sometimes when I speak to them about how simple, but how much it makes sense with the systems that they have in place. And what are some main differences you've seen? You've worked directly for some, you now have a number of them as clients. What are some of the differences you see between high net worth individuals like family office investors and normal retail investors other than just their bank accounts?
Yeah, I mean, well, yeah, that's definitely a part of it. But I think it's some of it is the complexity that gets involved with their ownership. When you have a family office, as an example, I'll just give you an example. If as a regular retail investor, you might just join as an LP in something, right? And a lot of times you're going to have it in your own name, maybe an LLC. When you're dealing with family offices, you'll have trusts, you'll have LLCs, you'll have different beneficiaries. Maybe one family is the trustee of something else, and it gets complex. And, one of the benefits that I have, as being an attorney is, and first of all, I do not provide legal services to any of my clients. I kind of keep that separate, but we have the knowledge base, and it allows me to kind of speak the language of some of the attorneys, is, understanding their org chart and their ownership structure, and then taking into consideration things such as estate planning and taxes. Do we work with estate lawyers? We work with their tax consultants. And frequently, I like to joke, but it's true, is I know more about their ownership structure than they do. All right. So, we have to, there's a certain level of complexity beyond just investing in the deal. There is also an expectation of that things will be taken care of, so having an advisor come in and kind of take care of that. But that's really one of the biggest differences, is it's not just the investment. It's not just putting, regardless of the size of the check, it's not just putting money into something as an LP. It's what's the ramifications of that? What's the tax consequences? How does it fit the estate plan? So there's a number of things that need to be juggled.
No, that's high-grade information.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
One thing with your, with building out a team, because since you have many different, let's say almost divisions, levels of your company, and, a normal property management company might just have, you have and when I see like local single office property management companies that I've worked with before, there's like the head person, there's a couple of there's admin people, and then there's people that go on the ground, you know what I mean, type stuff. Mm-hmm. Right. You're adding like a whole nother thing with advisory. I mean, how do you effectively like build a team when you manage property and advise on a level of almost like a COO for some of these properties and some of your clients?
And it's hard. I mean, I think every business realizes it's hard to attract and retain talent. But I mean, a number of things that we've done is really try to think of the positions that we're creating. So, for example, I have somebody on my team who I haven't seen this title, and I'm not like, the one to make up titles, just throw the word ninja in front of it and make it sound cool. But, I have someone on my team that is an account and systems manager. And it's the systems that are important. So, one of her roles is to continually make sure our operations are functioning, kind of across multiple departments, right? Because if there's one, the transparency and the communication is critical for us. So just kind of constantly watching those feedback loops to make sure we're working well, just internally as a team. I had seen, I forget what I was either reading or listening to, but one of the comments which really hit home was that service businesses are also recruitment businesses, because you have to really kind of constantly look at your team, how you're recruiting. It's our talent that helps execute this. One of the things that we did as part of this, like you said, with the advisory and kind of the COO service, was I asked the question to myself and the team is where can our services really be outstanding, right? Because what can we deliver at a true if our the baseline that we're setting for ourselves, our standards, if it's really to be outstanding, where can we accomplish that? And then look at some of the things where is it kind of just more commodity-like services, right? Not to bore folks, but your listeners will understand, like, in property management, things like COIs and paying bills and all those types of processes. We've looked at where we can automate and outsource some of those services. So our team is focusing on the real experience-based thing, the decision-making, the execution, so that I'm not bogging down my team with things that could be automated or possibly outsourced. And I think that's been a way to kind of help us grow and focus our services as opposed to driving ourselves crazy with everything.
That makes sense. One thing you mentioned there was on transparency, how important it was for your clients to see this. And I see this if you're doing property management and asset management. And one example I have when we were working with a family office, to get distributions out to our passive investors, we had to submit this request, right? And it multiple people had to sign off. I mean, it was a project. It was like, you know what I mean? And that's obviously, they have all these checks in place to make sure that it's not fraudulent and that there's money to pay taxes and everything else before we start, sending out money to people. Makes perfect sense. What do you see like this normally with, what are they looking for? Like, how in depth, I guess, is the transparency that when they're reviewing it, how much control do they have, I guess, over the checkbook when they're doing this? And this must be, if it's anything similar to what we've done before, I mean, it's pretty intensive and it's something that's complete follow-up because they're not in a rush to sign off. You know what I mean?
Yeah. I mean, one thing is it takes time, but, I'd say that, again, talking to my staff, talking about recruitment is, obviously, we're here to provide real estate services, but I tell people, what we sell is peace of mind. And that's kind of critical, right? Because these families and high net worth people that we want to work with, we need to show them, first of all, that we have checks and balances in place. Now, luckily, because of the nature of what we do, although I have plenty of checks and balances in place, like I'm often a signatory on the accounts. So, it takes a lot of trust. I provide, again, and I'll answer this in a moment, but transparency into the system. But by them giving me a certain amount of signing authority, I'm able to kind of execute and get things done. And again, because that comes to the granular level of where we work. But it really comes down to the availability of information. And I do find, frankly, that once you make it clear that information is available, I also tend to notice the review of it actually declines because it just helps to build trust. And like, here it is. You got, our value, and I tell people this all the time, our value doesn't come from hoarding information. It comes from executing and our experience and the actual execution and developing the strategy, not because we know, all the secrets and we keep it from everybody. So we really try to just share information with our clients, let them know where they are. And if they tell me, you know what, after a while, they don't need to know all those details and they trust that we got it, fine, we got it. But it's ready to go, at the snap of a finger, because that's how we try to keep our information. And a number of our clients, we have dashboards that they can access anytime. But frankly, like I said, after a while, you notice the logins decrease because they trust that the information's there.
Yeah, that makes perfect sense. It's always that when I'm working with new property managers, you kind of like start off with, here's the number, the threshold, and then it goes from here. And then after you work with them for years, it's like they're calling you and telling you, well, this was fixed, this was all set.
Yeah.
And you're like, that's perfectly fine, right? And there's certain things too, like if you don't, if there's hot water heaters out or HVAC system, like get all this stuff there. I mean, you know what I mean? Like we're not waiting. You don't need me to tell you to provide normal services to tenants.
That's the thing. I mean, you're there to do that, right? So if you have to go to them for everything, then they start to question, well, why do I have you if I'm doing all of this? So there's a little bit of that balance, but it takes time.
So we normally talk about residential property management or residential owning property, multifamily on the show. Myself being a multifamily investor since 2006 and self-managing properties for years, I couldn't find out that it was a lot of tenant, you're dealing with a lot. Property management was really repair oversight and dealing with tenants and constantly leasing. Now, how does this differ? Like, can you explain a little bit about when you're getting into single tenant properties, multi-tenant retail, shopping centers? How does your time and where you focus with these properties differ from what I just explained? That's probably a typical day in the life of a residential property manager.
I mean, it's kind of one of those things where there's certainly similarities, right? You have tenants and you have maintenance. It's just the structure is different. So, at the property, on the boots on the ground level, it's tenant relations is critical. Now the relations are different. You're not dealing with somebody in their home. You're also dealing with sometimes the tenant's emotions are not quite as crazy as they can be in the multifamily in the residential world because you're not dealing with somebody in their home. But it's a compliance, right? Generally, we are responsible for maintaining the roof, the structure, the common areas, the parking lot, or what have you. But the tenant relations come into play. A prudent property manager needs to make sure, although the tenant is responsible for the interior of their premises, right, we have to make sure that they're actually following that maintenance, right? Because we may get that space back. So, are they maintaining their air conditioning, their rooftop air conditioning unit? If it's a restaurant, are they keeping their grease traps clean? So it's kind of just watching over that. There's definitely the monetary aspects of it, the rent collection, right? That's going to come across with everything. The leases and the lease structures are certainly more complicated. They're longer term. There's going to be escalations built in there. And on the retail and industrial properties, most of them are going to be triple net. So you really have to kind of watch the expenses. You have to do more complicated common area maintenance reconciliations or tax reconciliations, and explain that to the tenants and kind of handle that. So the lease structures are certainly different and just require a bit more work. And then, there's also the vendor. We always have to deal with vendors and vendor maintenance and management. And then, capital projects. We also have to look into things, synergies matter in certain areas, like, with retail, right? The tenant mix is critical. So it's just a somewhat different strategy in terms of it's not just leasing and turning leasing over. You're dealing with, tenant exclusives. You're trying to find complementary uses. So you have to take a lot of that into consideration. Now, some of what I'm explaining gets a little bit more on the asset management side, I would say, as opposed to property management. But you're looking at the property as a business, and you need to take into consideration the types of tenants that you have. And again, the longer term leases means maybe a different type of underwriting when you're looking at leasing a space to a tenant that's signing for 5 or 10 years, and is still very hard to get out if for some reason they fail.
No, that's a lot of great information. I've found that before when myself, not coming from this commercial real estate retail type background, but if you go to really zero vacancy type plazas and stuff like that, and you can see how they've strategically that are really busy, right? So it's like you can see this mix of how they've structured their tenants, which is something that I don't see. I would never think of anything residential. You know what I mean? Like this is just like, but you see like, oh, this is a restaurant. This is this is that. And like everything works together where you have people going into multiple different businesses. And this is like how the whole thing has been structured. But it's a lot people just kind of pass by, but it's also how you strategically have set everything up for yourself and for success of your tenants.
Yeah. And, the other thing, again, this might be more asset management, but they're setting that up. And then, because we're dealing with longer term leases, we also look into things like, the lease rollover. Like we try to stagger our leases because you don't want to have a center, again, unlike residential, where you're going to have shorter term leases. We don't want to sign 5, if it's, let's say whatever, it's a 6-unit shopping center. You don't want to have 5 of those leases all expire in the same year, right? That's going to make obtaining a loan difficult. You're putting yourself at significant risk. So when there's just a different type of strategy you need to focus on, maybe stagger some of the deals so that you're not facing a large vacancy at one time, because the lease, the absorption time from when a tenant moves out to you get a new tenant in is going to just be longer naturally, to get the lease done, construction, permitting, all of that stuff. So you need to take into consideration kind of that downtime and spread it out a little bit.
Yeah. My dad had a partner that was a large commercial investor down in New Haven, Connecticut. And he would tell me, he said, because my dad was only in multifamily, and he would tell me that it's, commercial, when it's all rented, it's great, right? Everything's going right. But it gets very expensive when it's vacant. You know what I mean? And it's like you said, it takes many months to find that right tenant, hopefully not years, compared to residential where, lease up with some flags and stuff. And
you're probably right. I got somebody ready to go in the next day. Yeah.
True. So one thing before we wrap up here is I just had a question between kind of circling back to the high net worth individuals, the retail investors. How do they change really? Do you see differences in their debt structures or their kind of timeline for investing? Where I know for syndicators, our thing is like 3 to 5 years, or we'll say 5 to 7 years, really, which really isn't that long for real estate. I mean, this is a long-term investment. How do you see it differ with maybe your wealthier clients when they're buying properties? That's
a very good question, because there's certainly a difference. With the family office side, there tends to be, and this might be slight difference between a real family office and a high net worth investor. The family office side, they tend to think generational, right? So we're not buying properties to flip. We're basically buying them for long-term holds, and generally passing on to the next generation. Now, having said that, I have certainly, when I bring clients on, will evaluate their portfolio, and if something makes sense to sell because it's no longer kind of fitting, it's not a great generational thing, they will certainly sell it and then move the money into something else. But the hold periods do tend to be longer. And that changes the strategy, right? Because we're not looking to flip immediately. There can be somewhat more patient money, right? A lot of times depends on the family. A lot of them do, some family members might be living off of, these distributions. So it's analyzed more on a cash on cash basis, or just a distribution basis, as opposed to an IRR, based on a sale 3 years from now. So it's kind of, the metrics are different, but it also provides different strategies. Just a quick example, with this higher interest rate market that we were in, I had to do a number of refis only because the loans matured. If I could have waited, I would have, but we were able to do swap structures on those. They tend to have a higher, prepayment penalty, for lack of a better word, when you do a swap deals. But we knew we were holding these, so it gave us the flexibility to basically lock in a rate, a significantly lower rate, because we knew our strategy was to hold, and to stick with it that way. Some of our higher net worth clients may look a little bit more for like the shorter hold periods, where they're just now to put their money into the next deal. So that certainly does vary. And, our syndicators, again, we're structured to work with them, but our syndicators are more along those lines, kind of what you talked about, of anywhere from 3 to 7 years holds.
Yeah. An older investor told me years back, he's like, if you can buy a property, it cash flows, apartment buildings, and you can keep it from 10 years, I guess it goes for any property type, that's where you're going to make money. The problem is when you disrupt that, you know what I mean? And you got to sell it in 3 years or 7 years or whatever it is. But if you can keep it 10 years, even if you're going to go through some choppy waters, the whole thing is that, get into that decade plus hold. That's where you really build wealth in real estate, which I've you figure out as you're in this longer that person was right. You know what I mean? That's how you make money. Yeah.
And tax strategies start to get a little different if you do eventually unload a property that you've held for 20 years, because you probably have a zero basis or a negative basis. But then, thank goodness. And if it stays, the 1031s, that's what they're for. And then you buy something else and kind of put that into the fold.
Andrew, as we're wrapping up here, I have one more question before we let people know more about your firm. What are some common mistakes, I guess, you see commercial real estate investors make over all the years you've been doing this?
I think, one of the things you kind of hit the nail on the head a little bit, where just understanding the difference, in the type of asset you're buying, right? A commercial property, retail office or what have you, but, since we were mentioning retail, sticking with that, is the risk of downtime and kind of the need to be patient and what it takes to stabilize a property. There's a certain level of patience that comes into it. There's a certain level of risk if a tenant goes out, and just understanding things like absorption time and costs that go into a deal. One of the biggest things I tell, like I said, whether the client's been around, I'm not pretending like I'm here to educate every client. They're successful for a reason. But I always use, when I have the conversation with them, I always talk about objectives. What are your objectives? Because I do have some of my clients they might just look to put some money in an LP or something like that, as an LP investor. And they'll come to me and say, is this a good deal? And I'll look at it and say, well, it depends. What's your objective? Right. And I think that some investors can actually lose sight of that. It's a little bit more of that fear of missing out thing, but not necessarily understanding, well, what's the objective? Is it something that's not going to give you distributions for 3 or 4 years, but it's promising something that is going to sell, and then you'll get a major return, but you have to realize you're not going to get any distributions, right? So I think it's kind of understanding the deal and not just getting excited about some metrics that you're seeing, So I think that's kind of important.
Yeah, people comparing the IRR between deals and stuff. So, which happens all the time.
Oh no, absolutely. But again, maybe digging deeper into it, I think is important.
Andrew, how can our listeners learn more about you and CRE or Vertical Advisors?
Well, I think certainly our website, CREvertical.com, is a great place to start. We have some articles up there, and we're looking to do more in terms of trying to provide hopefully some valuable information. In terms of social, we're probably mostly active on LinkedIn. So you can just look me up, Andrew Lofredo. My name is simply there on LinkedIn. And we do have a company page on LinkedIn as well. If people check out the website and sign up, we are looking to launch a YouTube channel, hopefully providing some, valuable educational and hopefully at least somewhat entertaining information. So not. But we're looking to launch that as well. So they can sign up. And we'll be sure to let them know once we launch that.
Well, Andrew, thank you so much for coming on today, and looking forward to connecting with you here in the near future.
All right, great. Thanks for having me.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.